Good afternoon, everyone, and good morning, depending on where you are. We have a number of participants joining from across the globe. Welcome. We are hosting this webinar hosted by CapitaLand Investment. I'm your host for the session. My name is Hardik Gesota, and I head the India Private Funds. We are delighted to have you join us for what promises to be an insightful discussion. If I could just brief on what we expect today. So today's program is designed for investors looking to gain a deeper understanding of the key factors shaping India's economy following the recent India elections. Number two, the focus is on how these economic and policy changes will impact real estates, helping you strategize and make informed investment decisions. And we hope you will receive and gain valuable insights that will help you navigate and capitalize on the future dynamics of India's real assets market. A quick infotainment on CapitaLand Investments. We are actually celebrating our 30th year in India this year. We have been present across office, logistics, data centers as an asset class, and there are a couple of newer asset classes that we are looking at currently. Before we dive into today's webinar program, I'd like to cover a few housekeeping points. Number one is duration. The webinar will run for approximately an hour. We will begin with a high-level briefing on the economic outlook and policy shifts in Prime Minister Narendra Modi's third term. We will follow this by a panel discussion on the implications for India's real assets industry. We will then open the floor for a Q&A session. Please use the Q&A feature to submit your questions. We will address as many of them as possible during the Q&A segment, which is in the last part of the session. Number three is, please note this webinar is being recorded. A link to the recording will be shared with all registered participants after the event. We look forward to a productive and engaging session. Now, let's get started. Let me welcome and introduce Mr. Vijay Venkat Raghavan. He is the partner and head of India at Hakluyt. Vijay joined Hakluyt in 2019 and leads its India business. And before Hakluyt, he spent close to a decade in the private equity industry with Faring Capital and General Atlantic. Earlier in his career, he advised infrastructure investors as part of KPMG's transaction services practice. Vijay, you are well placed to comment on this section. Welcome.
Great, thank you. Thanks, Hardik, and thanks, CapitaLand, and thank you for this opportunity. Just very briefly on Hakluyt before we get into the meat of the discussion for today. Hakluyt is a global advisory firm headquartered in London with offices around the world. We work with many of the world's leading investors and corporate groups on important decisions that they are taking. And it's been a real privilege for us to, have known CapitaLand and collaborated with them on a few situations in the past. So thanks again for this opportunity. I will be spending approximately 15 minutes just to give you some thoughts from Hakluyt's perspective on what we are seeing in India post recent elections. There are, broadly three things that I want to sort of talk about. One is economic outlook. The second is policy shifts, and the third is, putting all of that in the context of geopolitics and implications for the domestic market from geopolitical, shifts. Maybe just before that, as I'm sure all of you know, the elections have now concluded. Marginally disappointing for the BJP relative to the rhetoric that they were having before going into the election. But on balance, in terms of our conversations that we've had with corporate leaders and people in government over the last 6 to 8 weeks, the sense is this is a good outcome for India over the long run. This is very strongly reinforcing India's democracy and the voice of the people, which pretty much dictates public policy. That message has been delivered very clearly, while simultaneously maintaining stability, which will allow for growth. the general expectation at this point of time is, although it's a coalition, government, this administration will complete its 5-year term. It is a coalition of more or less like-minded, right of center, right of center leaders in terms of their economic outlook, and there could be some changes in the cabinet as the government goes through its 5-year term. But broadly, the stability of the government at this point of time is not under question. So what the elections have delivered is basically continuity at the leadership level, therefore relatively high likelihood of continuity at the policy level, while at the same time strengthening institutions, strengthening democracy, and having a relatively stronger opposition, just in the spirit of preserving checks and balances for the long term. In terms of the economic outlook, as I briefly alluded, there is significant policy continuity that is, expected on economic issues. By that, what I mean is the government is committed to fiscal prudence. It has managed inflation rather very well over the last 5 years, including compared to some Western economies that are grappling with, significantly high inflation. India remains relatively benign, which is great in terms of investment outlook. India will continue a fairly deliberate but calibrated path in terms of bringing in foreign capital, and foreign ownership caps, to the extent there are any remaining, will continue to be relaxed. So the economy is going in the direction of more openness and not the other way around. And that's the journey that it's been on for the last 10 years, and it's likely to continue in that journey. A couple of other, interesting facets of Modi's administrative outlook and his view on the economy will continue in the third term, which is formalizing the economy and digitalizing the economy. We have seen, we've seen this play out over the last 5 to 10 years in many ways. But this government strongly believes that bringing more and more businesses and individuals within the formal economy, within the tax ambit, is really the way to go for India. And using digital as a tool for public administration and also for private enterprises to leverage is seen as a way of bringing efficiency, both in terms of welfare administration, but also just in terms of the overall sort of efficiency of the economy. So digitalizing, formalizing will again remain a focus. So will be the focus on infrastructure and creating a manufacturing ecosystem for jobs to be created. On the last point on manufacturing, it's been talked about quite a bit over the last 6 to 8 weeks in the context of the election results. I think India is creating blue-collar jobs, but probably not enough given the size of the population and the size of the young population that's coming into the workforce. Now, this is something that the government is absolutely aware of, and they have been proactively working to address issues that are coming in the way of creating manufacturing jobs. So the entire push on infrastructure is to use infrastructure as a sort of a multiplier in order to create a manufacturing ecosystem. There's also significant progress that's been made in terms of ease of doing business, which again is expected to sort of encourage more manufacturing jobs to be created. The one shift, and again, it's not a big shift, it's a moderate shift in the next 5 years compared to the previous 5, is that the government will be a bit more mindful of rural distress, of the rural economy. There could be more, welfare, targeted welfare, well-directed welfare, but there could be a slight sort of slant towards a more sort of welfare-oriented approach, as opposed to a completely sort of market-oriented approach. As I said, the government's commitment to fiscal prudence is established. They reinforced it yesterday in the budget. So while the welfare slant is likely to be emphasized, it's unlikely to break the bank. So to say, the government's balance sheet is likely to remain in reasonably good shape. Given all of this, the expectation is that economic reforms will continue. There are a number of priority areas that have been identified for reforms, and there is broad agreement within the government, including with its coalition partners, on the need for pursuing some of these reforms. Where there may be slight sort of delays or sensitivity is really around reforms that touch the rural economy, particularly around agriculture, and rural labor, etc. Those are areas that are slightly more politically sensitive given the makeup of the government today. So the expectation is that those are topics that the government will not broach in the immediate, let's say, 1 to 2 years, and they would rather pick those up later on. But for the foreseeable, I think there is enough work and enough of a roadmap that's been laid out in terms of creating manufacturing ecosystems, improving the skill levels of young talent coming into the workforce, and several pockets of the domestic economy, including infrastructure creation, financial services, healthcare. All of these will see significant reforms in the next few years. Just shifting slightly onto geopolitics and how that could impact India or its trajectory over the next 5 years. Look, I think it's fair to say that India is in a real sweet spot, geopolitically speaking. India is being courted by countries from the US to Europe to UK and certainly countries in the Far East like Japan. So India has positioned itself as a natural friend of many countries, and this is despite certain fundamental sort of contradictions in terms of India's relationships with Russia, which countries like Europe and the US find it hard to process. But despite the challenges of that positioning, India has maintained and strengthened its relationships with a number of countries. So it is in a real sweet spot. It is offering something for both companies and governments. And what it's offering is pretty clear. It's offering a combination of scale and growth, which is not seen anywhere else. So it is a very attractive frontier market for practically every global company, irrespective of what business line they are in. And therefore, it is a market and country of significant relevance for the countries where these global companies are based. And given the increasingly sort of tense relationships between the West and China, India is almost seen as a natural ally that for Western countries, including Japan. By West, I mean the sort of global West, for them to sort of cultivate as natural partners. So the foreign policy objectives of India are therefore clear. India wants to prioritize its own gains over the next 5 to 10 years, position itself as a leader of the global South, while still maintaining important strategic friendships, the most important of which being the relationship with the US. But also followed by the relationship with Japan and the relationship with the Middle East, etc. Most people who follow Indian foreign policy, view it as one that is driven by pragmatism and economic sort of goals as opposed to ideology, and that therefore is seen as the right framework for India to think about its foreign policy given the current circumstances. India has never really had a better relationship with the US than in the last few years. If you dial back 20, 25 years ago, the relationship was practically non-existent, but India has now emerged as an important, one of the two most important sort of relationships for the US in Asia. So that's a great sort of position to be in, and India will continue to make itself more attractive. You will see countries and blocs trying to do free trade agreements, wanting to make capital flows easier, wanting to develop India as an alternate sourcing destination over the long term, et cetera, et cetera. And this desire for the whole world to do business with India, in a way, is now making India spoiled for choice. And that's a good place for India to be in. So the combination of what the economic outlook here looks like and what the geopolitical sort of positioning looks like, how that's actually translating in terms of investment outlook, unsurprisingly, the outlook is very strong. We are seeing significant flows from both foreign capital providers, but also more importantly, there is substantial corporate confidence that the big Indian groups have in terms of putting capital to work back in India. And this is a remarkable shift if you compare the sentiment today with what it was about 10, 15 years ago, where most Indian groups were actually looking to deploy capital overseas. But now the big conglomerates, the big Indian companies are looking to put money back into India. There is a strong desire for these companies to now look for opportunities beyond traditional sectors and look for other opportunities in newer sectors, in the internet economy, in the digital economy, in just in terms of tapping the consumer spend that is now becoming much more stable and tangible, in the Indian context. So just to sort of summarize, the investment outlook is strong. There is always a little bit of tension between the macro and the micro. So the macro really is providing significant tailwinds. The success for foreign capital in pursuing opportunities will ultimately depend on execution, partner selection, and just managing the occasional complexity that India throws up for anybody. But otherwise, the outlook is stable, positive, and getting better. Maybe with that, I'll probably hand it back to Hardik for continuing the rest of the webinar.
Thank you, Vijay. Thanks a lot for these very insightful discussions. Some of the key buzzwords, just summarizing your discussion, was stability and continuity for the current government. You spoke about a balanced approach considering the coalition. You spoke about rural distress. That's one point which may lead to welfare-related policies. Pragmatic foreign policy, so great to see continuity there. And not just private India capital, but also foreign capital coming to India. So thanks for these comments. We will now segue into the second section, which is a panel discussion focused specifically on the India real assets market. We have full house. I would love to introduce my colleagues, Sanjeev Dasgupta, who is the CEO of CapitaLand Investments India. Sanjeev really drives the overall business. We have Aloke Bhuniya joining us, who is the CEO of Ascendas Firstspace and CEO of India Logistics. Ascendas Firstspace is a joint venture between CapitaLand and Firstspace, and Aloke oversees the platform. He comes with rich real estate and investment private equity experience. We have Surajit Chatterjee, who is Managing Director of Data Centers in India. Data centers for CapitaLand in India is a relatively nascent business compared to office and logistics, but it's scaling up very, very quickly. Surajit is responsible for managing the data center portfolio and optimizing and expanding the operations in India. He has more than 26 years of experience in this industry. And last but certainly not the least, Sumit Gera, who's the CEO of India Business Parks. Sumit drives the overall growth initiatives for CapitaLand's Business Parks portfolio in India, as well as contributes to the growth strategy. He also comes with significant real estate experience. Now, before handing over to Sumit, let me just remind the audience that if you have a question, please type it into the Q&A box located at the bottom of your Zoom screen. And we will certainly try to address as many as possible during the Q&A session. With that, over to you, Sumit.
Thanks, Hardik. So after that engaging discussion by Vijay on the Indian politics, I think my takeaways are less than 2 months ago, we have now a coalition government after so many years. But what Vijay thinks is just, besides maybe some unrest on the rural side or maybe some tricky situation geopolitically, he's very positive on policy and reforms, foreign investments coming into the country, open economy, focus on manufacturing. So all this sounds very good, but I think the devil is in the details. So for that, I would like to go around the table with our panelists this morning, Sanjeev, Aloke, Surajit, to get their views on what this new coalition government and maybe some comments on the budget, what that means for each of our businesses. So maybe we start with Sanjeev, as he heads the entire India business and also is a CEO for Client. Sanjeev, over to you.
Yeah, no, thanks, Sumit. So I would say that the budget is a good directional statement for the government in terms of some of the key things it wants to address over this term of 5 years. Firstly, of course, I think we talked about it being a coalition government. It does seem to have addressed financially some of the needs that both the states that are key to the coalition had expressed in terms of building the capital of Amravati, similarly providing financial support to the Nitish Kumar government. So I think that, in my view, probably adds another leg of stability by addressing the immediate needs of the two key coalition partners. Coming to the key aspects that the budget touched upon, I think it's an interesting mix. I would say first and foremost, of course, what seems to have taken up some of the attention of investors has been the capital gains tax changes. I think it's while at a headline level there have been some increases in the capital gains tax, but actually for the business that we inhabit, which is the private funds business or the private capital business where most of our India assets sit, actually the unlisted equity capital gains has been reduced. So we are happy to see that. There is also some high-level announcement, which I think will translate into details over the next few weeks on FDI policy changes, making FDI rules more simpler to navigate for foreign investors. So I think that's an important step. I mean, looking at it otherwise, I think that clearly the government felt that job creation was something which was not considered to be a success in their last 2 terms. And they have announced a large capital allocation for skills development and apprenticeship for young people. I think that, if implemented well, can go a long way. Overall, I would say, yeah, from a business standpoint, I think the other thing I liked about the budget is it's consistently now for the last 3-4 years aiming to reduce the deficit. This is the first time, I think, after quite a few years that it is aiming to take the deficit below 5%, which actually puts India in a very good place relative to many other countries, and both directionally and in terms of actual position where it stands. And that will, in my view, mean good things in terms of FDI inflows, stability, currency, and so on. So net, I think this government seems to have laid the foundation for a stable 5 years, and the policies it's looking at will actually hopefully address some of the gaps that probably translated into a lower majority in the state elections.
Thanks, Sanjeev. Aloke, I mean, consumption and manufacturing, two of the keywords that keep coming up, and now with this coalition government. Another thing we hear is China plus one. So all that sounds very exciting for all the businesses that you are in: warehousing, logistics, industrial. How do you feel about this?
So if you look at the consumption per se, there are certain factors over the last couple of decades which has been driving consumption in India. And if I have to block them into few parameters, one is definitely the demographic dividend that everyone calls, which is we have the largest population, and also over 50% of that population is below 25 years. And our median age is 29 years, which is significantly lower than any other comparable country in the world. So which is one of the factors which has been driving consumption for a long period, apart from the fact that the overall GDP and per capita income has also been growing consistently. Now, these are some of the things which is going on and will continue to go on in the near future, and it's not dependent on elections or a single budget. I think what is very, very important apart from these is if you look at directionally over the last couple of decades, growth rate has done is today we have about 34%, close to about 35-36% of the total population, which is considered upper middle class or high income group, which is expected to go to over 54% by 2030. Now that's a significant number. So if you look at the overall population, that is going to go up, and that will continue the singular trend of increasing the consumption. And the last piece in that is the increase in discretionary spending, which is including your mobiles, equipments, and travels, and all the other things, which has been consistently increasing, which is a general cultural shift which is happening in India and which will continue to happen. So if I look at all of those things, I think consumption-driven growth, which we have been seeing in India, will continue. What it has done, and which I think Vijay mentioned it a little bit on, is the rural consumption has not been doing great over the last maybe couple of years because of little bit of rural distress and employment issues. But if you look at given the election result, I think, and some of these things, government is going to do a balance, which is between infrastructure spending and directional benefit to rural population. And one of those things which we can also see is in terms of the income tax changes, which is done, which will put some more money in the lower middle class and middle class population's pocket. Apart from the directional benefits which will be transferred to rural India, I think that is only going to increase the consumption in the near future. Coming back to the manufacturing piece, I think there are two parts to the whole manufacturing. And if you look at this current government over the last 10 years, it has consistently focused on manufacturing because of two reasons. One being self-reliant, and second and more importantly is if you look at the job creation, which is the biggest problem India has been facing in the economy, and which had one of the major factors in terms of the elections which we just fought, can only be created large scale for a populous country like India through manufacturing. And government definitely is going to focus quite a lot on that, because the target today, if you look at it, we have only 17% of our GDP from manufacturing, and government targets it to be close to 25% by 2025. And this can only happen through a lot of focus on manufacturing, which we see a lot of action on ground, which is China Plus One policy, PLI scheme, ease of doing business. And a lot of those things is getting translated. And I think it will be a political compulsion also to work hard on that direction to see that the manufacturing improves in India.
Thank you, Aloke. I think very insightful. And we'll come back on China Plus One. But first, I wanted to hear Surajit's view, since the budget and the government also seems to have a lot of focus on digitization. All that means, a lot of people may not understand, but that it could mean a lot more demand for data centers. So how do you feel about the government's plans overall? And does the coalition coming into power mean anything different for you, Surajit?
Sure. Thank you, Sumit. And morning and afternoon to all. And I think very rightly said, I think today India is in the cusp of a digital evolution. I think when we looked at about COVID time, India's data center capacity was around 350 megawatts pan India. I think as we speak today now, we are in the range of about 850 megawatts. And this is likely to double up by the year 2026 to 1600 megawatts. I think this entire shift is being seen largely due to the policy changes the government was able to bring for this asset class in terms of rolling out separate state policies for data centers, which brings investment and more focus on the investor. I think the Digital India initiative, and as Aloke likely said, our mean age is so 29, with a very digital young India. I think there is a lot of stress and focus on digitization, the data localization policy, the government support towards bringing the latest technology through, which is, AI and ML intervention in India, and also a lot of, I think, technology capability which it's building to improve the skill set to operate these digital infrastructures called data center, which helps us to, become a very strong proposition to the entire industry in terms of becoming a data center hub for at least the APAC. We have also seen in the last 2 to 3 years, the amount of investments is being seen in this asset class. It is pegged, and what data says, it's about 5.7 billion USD to be invested by 2026, with most of the large cloud players investing into the country to build the infrastructures. Today, I think India is poised for a very, very large growth, and in terms of not only catering to the global back office in terms of the infrastructure, technology support, and skill set, but also to the catering to the domestic use, which is largely seen increasing through the verticals like banking and the financial sectors, e-commerce sectors, ITS sectors, and so forth. Thank you.
Thank you. Sanjeev, on office, just to round up all the asset classes, office seems to be a bad word in most of the world today, but India seems to be having a party of sorts in terms of take-up of office space. How do you correlate the two? How do you describe what is happening in India versus, say, the US or Europe?
Yeah, you're right. I think India and maybe one or two other countries in Asia are clearly seeing a very different office market in a positive way. And I think firstly, we need to look at what India office does for its occupiers, right? So almost 75 to 80% of India's office market is serving the technology services sector across a wide spectrum of industries. And one of the things which we are seeing in the last few years, in particular since COVID, as work from home has become a very dominant trend in the West, many of the multinational companies from US, Europe, etc., are seriously thinking that if I have to get a job done in the US and I can't get that job done physically, then is it better for me to get that job done in India, which is a highly talented skill base, at a fraction of the price? And that is a very interesting trend, very visible in the markets. If you look at last year for India, India leased a little over 61 million square feet of gross across the top 7 cities, which is very close to the all-time peak of 2019. The first half of this year, India has done about just under 34 million square feet, which on a run rate basis would make it like a 68 million annualized figure, which would be the highest ever on record if that were to play out. And majority of the tenants who are growing or expanding their business in India in the last 18 months are the multinationals. And the other interesting trend is that these multinational companies come now from a wider spectrum of countries. Earlier, it would be predominantly US. Now we're seeing European countries, we're seeing Japanese companies. And we obviously also experience this firsthand through the tenant base that we have in India. So the one other interesting point I also want to make is India is increasingly emerging as an innovation hub. So we have world's largest semiconductor related tenants within our base. Today, very soon after they conceptualize a new product in their headquarters in California, they bring it down to India to actually implement it from an R&D standpoint. And they have, in fact, been one of our fastest growing tenants. And so I think these are some of the reasons why I do feel that India office is different. One, I think 2 trends, however, in India office, I think will continue to stay. Hybrid working, 3 to 4 days a week. I think that is definitely the trend with many occupiers. The second thing is that we are also seeing occupiers push their employees quite aggressively to come back to the office because they're realizing the productivity impact. And it is not that the tenants are able to reduce their footprint. simply because the tenants are coming back 3 to 4 days a week. That's the other thing now, which is quite clear. So these are some of the key trends. And the last other thing is, of course, the growth of managed office and flexible and co-working. I think that again is a trend which I think is here to stay.
Thanks, Sanjeev. So, I mean, next question also to you. Given, Aloke is very excited about consumption story and manufacturing. Surajit feels the demand for data centers only going to rise exponentially from here, and your views on office. Where does, I mean, as for CapitaLand and the real estate or infrastructure industry in general, where is this capital coming from? Obviously, a part of it comes from domestic sources, but in terms of foreign capital, who's coming in, how and who's pausing for a while what is the reason they're pausing, and also what are some of the challenges that LPs or investors have faced in the past or should be careful of now? So a bunch of questions I'm happy to repeat, but over to you, Sanjeev.
Sure. So I think the demand for, or rather the investment demand from global investors into India does vary depending on the asset class. I think I would say logistics has probably got the widest spread, right from North American investors, Canada in particular, some European investors, and of course, a lot of the Asian investors are very, very keen to get exposure. And within Asia, also include the Middle East. So from a very broad spectrum, I would say logistics and industrial is one of the most sought after asset classes. So, I think Aloke is in a good place. Data centers, again, actually, what I would say that in the last 12 months in particular, the tremendous takeoff of generative AI has significantly escalated the demand for DC capacity. And so DC capacity also, or DC investment also is fairly widespread. But the increase in interest is more, I would say, in the last 6 to 12 months. Logistics has been there now for a few years. The other interesting thing about data centers is also that data centers are a difficult asset to create. It requires a lot of complex design, infrastructure, power availability, telecom availability, and it's also very sensitive from a continuity standpoint for the end customer. So therefore, it's not easy to get access for investors to get access to data center assets. And I do think that companies that like us that are creating state-of-the-art data centers in all the key markets in a high growth country like India will be quite uniquely positioned to attract capital. The other asset class, of course, where we have a significant presence right now and as the largest asset class is office through the business park segment. Office, I would say, is a little more muted. I think the office demand comes more from Asian investors. Japanese investors are very keen to get into office. Some of the Singapore investors are very keen to invest in India office. I think the investors in office are the ones who have been in India for a while, who are very familiar with the outsourcing story and its strong potential. And they've seen multiple cycles on how India has actually emerged stronger in the office segment after the GFC, how it emerged stronger after COVID. So they continue to feel that from a long-term play and from a volume of investment standpoint, office is an attractive asset class.
Sumit, you are on mute.
Sumit, you're on mute.
Thanks, Aloke. Yeah, thanks. No, and some of the challenges that LPs have faced or are careful of today, the way of doing business is different from what investors might be used to in their home markets.
So if we look at the way investors are going about their capital allocation process, one is, I think they're very, very focused on who their partners are, what kind of domain expertise they have on the ground. I think the second part also is that they do want to have significant rights and involvement in the asset selection process if it's going to go into blind pool fund. I think there is a lot of governance that they would expect to get. The other part of it is also just being very selective about the cycles where the asset classes sit. So, I think the reason why people like logistics and industrial is because both the consumption story coupled with the manufacturing +1 strategy, India is clearly visibly benefiting from that. So I think they see a positive cycle for the logistics and industrial asset class in India. It's the same with data centers as well. I think the hyperscale demand for India has been exceptionally strong in the last 1 year. This year, we are probably going to see one of the highest take-ups ever in India by hyperscalers. So clearly they're able to see where that asset class is going. Office, I do believe that we are going to see a flood of capital into office over the next year or two as investors realize that the office leasing momentum is back and rent reversion is strong. I mean, we are already seeing that in our portfolio. So I think to the broader question, I would say investors are much more careful about partner choice, governance, and the cycles of the market.
Yeah, thank you. Aloke, everything seems positive on your side in terms of capital wanting to partner, China +1, the demand that you see playing out in your business. That you see playing out in your business.
Sumit, you're on mute. Couldn't hear you. In between, you broke off.
Okay, sorry, let me repeat my question. I'm saying, am I audible now?
Yes.
Yeah, so I was saying everything seems positive on logistics and industrial side, where you have a lot of demand from investors as well as tenants, and the government seems to be helping out. So, what are some of the challenges that you see while running your business in India today?
I mean, the biggest challenge, I think, which is for us is from the land acquisition perspective, and which I think it's not only for us, for large scale infrastructure project, probably excluding the government ones where there are specific rules laid down. It is a challenge, and it continues to be a big challenge for us. And the second big challenge, I would say, is lack of uniformity, I would say, in terms of when you are working across India, across various states, in terms of the regulation and the continuous change of regulation, which makes it sometimes difficult to take a very, very long-term view. But I think some of those things are happening because India is going through a very, very fast growth, and all the government, including the administration, is trying to figure out what is the best way move forward. When I say that changes in regulation, I don't mean it in a negative manner, but I would say it is the government and the authorities trying to figure out what is the best way to move forward, what is the best way to do things. And sometimes the impact of geopolitics also is there with respect to the investment decisions. Apart from this, I think, yeah, I mean, the sector definitely is doing well, and it is very, very attractive. And as Sanjeev said, that is the reason why you find a lot of investor interest. And in spite of all the challenges, if you look at it, there has been a growth in the industry, close to about 20% plus year on year for last 5 or 6 years. And I see with the manufacturing getting the attention that it is, probably we will see a better growth in future in spite of the challenges.
Thank you. Thank you. Changes in policy, something related to that for Surajit. So, I know you're building some fantastic product and there's some good discussions on demand for the data center that you're building. A challenge that the data center has is on sustainability and energy consumption. So how is government policy supportive or hindering?
Sumit, you went on mute. Can you just repeat the last line?
Sorry, I think there's some issue with my internet connection, so I apologize for that.
No worries.
I was saying just in your pursuit to make sustainable data centers, what support or hindrance do you see from the government today? And are you still able to sort of get to the CapitaLand goals for 2030?
I think at this stage, I would say it is a little work in progress, but I think the government have understood the need of sustainability, in terms of, because end of the day, this asset class is a power guzzler. And I think the government duly understands this, and they're doing enough and more at the central and at the state level to ensure that the service providers have various options available to them in terms of providing various sustainable solutions. I think what is more important from an asset class is also that all the global players, including us, are very, very prudent to the fact that our designs, our operationals, are all skill set around sustainable design factors. Hence, I think in the next 2 to 3 years, this asset class would be absolutely ready to compete with the global requirements of meeting the sustainability goals, not only in terms of the overall design certification or an operation perspective, but also from the authorities and government perspective is doing enough and more on ensuring that we are sustainable as we grow in the future. Thank you.
Thanks, Surajit. Sanjeev, on sustainability, do you think is it now a differentiator to us when we go to tenants? Because we have demand for sustainability from our investors today, but do tenants value that also?
Yeah, I mean, I would say it's some tenants value it more than others, but that percentage of tenants who are asking for sustainability solutions, be it in the form of renewable energy, water consumption reduction, that percentage is growing very rapidly. And I do think that if one does not have green buildings in the years to come, it will actually become more and more challenging to lease and get a good rental. I do think that's increasingly going to become a differentiator. So it's just a matter of time, and the trend is definitely towards more sustainability.
So just running out of time here, so we'll summarize the discussion so far, and it's been very helpful for me to hear all your thoughts. So it seems like the coalition government has not made a big impact in the policy continuity. All the sectors that CapitaLand is in today are beneficiaries of sort of the manufacturing or the outsourcing trends or digitization trends, all the things that are close to the government's heart. What Vijay said in terms of partner selection being key, differentiating between the macro and micro, and Sanjeev then commented that some of the things that investors look for while coming to India is governance, the right to participate in decision making, and maybe things like sustainability. So yeah, with that, I think we come to the end of this panel discussion. Thank you so much, Sanjeev, Aloke, Surajit. Thank you.
Thank you, Sumit, also, and everybody on the panel. We will now move on to the Q&A session. This is your chance to ask questions to any of the panelists or any of us. We do have a few questions coming in. Let me start with the first one. The first one is views on India's strategic replacement of USD in bilateral transactions with domestic currencies with the non-US partners. Okay, so to summarize, the question is on in INR replacing USD in some of the global transactions. Any comments on that? I do note that it's extremely small as a percentage today. There was an attempt to buy some of the oil in rupee terms, but very, very limited transactions as of today. Any comments on USD versus INR in general?
My view is that we will. I mean, see, there are two aspects to this point. One is how big is India's share in global trade, right? And how much do partners need INR as an important trading currency? So I think in oil, definitely in trades with Russia, with some Middle Eastern countries, India has been able to flex and have INR used as a trading currency. I think India's share in global trade is increasing rapidly, but is still relatively small for it to become really scalable. I do think that will change over the next 5 to 10 years. The bigger opportunity for India, I think, is because of its global leadership in digitalization, and where it can actually use the Indian backbone of payment systems to transfer money to other countries globally. It's already now able to do that with Singapore, Thailand, France, and that number will grow. So, which is, I think, is scalable much more quickly, and I think is going to gain momentum and actually make it much easier for to move money across borders for Indian businesses and individuals.
Thank you, Sanjeev. I also just a couple of points to add is one is I do note that the cost of hedging for the Indian rupee against the USD has come down significantly from the past. Our understanding is currently it stands between 2.5 to 2.75%, which used to be significantly higher. And that's to do with interest rate differentials coming down, number one. And number two, the currency trading quite, I would say, quite relatively strongly. So that's an interesting takeaway as well on USD versus INR. We will quickly go to the next question. Vijay, this question is directed to you. You noted that the government wouldn't touch rural agriculture economy near term as it is too politically sensitive. What would be the target reforms here medium term? So the question is around rural stroke agriculture economy.
Sure. What I meant was the more tricky stuff around rural, etc., will not be touched. There will be a lot of welfare-related measures for the rural economy, as we've all sort of talked about. The other reforms are look broadly in line with what was previewed to some extent yesterday. I think there will be tax reform. There will be more around skilling, which is not in the nature of the government creating capacity, but creating an enabling framework for the private sector to participate in the skilling journey. There will be targeted sort of measures to create capacity around specific industries in manufacturing. I think Aloke mentioned the whole sort of self-reliance goal around manufacturing. So areas like semiconductor, etc., will continue to see that reform. And the largest being, the welcoming approach towards foreign capital. So you could see some reforms in terms of lowering of foreign ownership, caps, etc., which will also sort of continue. So most policies that largely are around urban, semi-urban markets and around job creation, etc., will continue. Even on land, I think the move to digitize urban land is a pretty significant one. You will be able to better appreciate the implications of that. But those things will continue. The more tricky sort of stuff around the rural economy is where there could be a bit of a pause given political considerations.
Thanks, Vijay. We do have a question on the budget, which came out yesterday, and the implications on the property market, predominantly linked to taxes. And would this be uniform across all asset classes? Okay, yeah, to step back, there has been a few tinkerings on taxes, especially with respect to tax equalization if the property had been bought number of years back. So any comments on tax, Aloke or Sanjeev?
So, you want to give your views?
Sorry. Yeah, I'll go ahead, Sanjeev. So as Sanjeev mentioned, so there are two aspects to or I would say three aspects to these tax and the property related stuff that we see. One is with respect to the long-term capital gains on the listed and the unlisted, and as Sanjeev mentioned, the unlisted piece is definitely going to benefit in terms of the long term. On the property side, what they have taken out is the indexation part. So on a if it is a inherited property, there is some taxation which has been introduced. But I think given the way the change of tax and the indexation benefits, I don't see with respect to, and that is only applicable for residential. I don't see there is going to be a significant impact on the residential demand per se that this tax will have going forward.
Got it. Thanks, Alok. We do have a question about offshore investors. How should they think about the Indian currency going forward as a part of investment underwriting?
Maybe I can take a stab at that. So I think the prudent thing in my view is to build in the business plan a 2.5 to 3% annual currency depreciation. And the value creation, I mean, I can maybe talk specifically about our own portfolio. In our office portfolio, including the mark to market on rents, we have grown our rents by about 7 to 8% every year. So even in US dollar or Sing dollar terms, actually Sing dollar is the currency tends to be more like 3% depreciation. So at about 4 to 5% Sing dollar growth after offsetting currency. I would expect that, and not I would expect, actually even in logistics, maybe Aloke can add, I think the growth is fairly similar. And if I have to actually look at the financial impact for, let's say, CapitaLand India Trust, for example, out of $100 of capital value appreciation for our assets, about in rupee terms, about over let's say a 10-year period, about 30% of it has been taken off by currency depreciation, but there's still like a 70% growth over a 10-year period in Sing dollar terms. So and that's actually quite well captured in our financials. So that gives you an understanding that at least what we've seen is the increase in asset values driven by underlying rental growth significantly outstrips currency. But yeah, it's always prudent to have that 3% sort of a depreciation number. And I mean, actually, I very distinctly remember this when I joined the group. The rupee was at about 45.60. And if we look at the FX now, it's about 61. So it's about almost just exactly 30% in about 10 and a half years of depreciation, which translates into a CAGR of about 2.8, 2.9%.
Thanks, Sanjeev. I think, we have, thank you all for your thoughtful questions. Unfortunately, we have run out of time for today's webinar. And if we didn't get your question, please feel free to reach out to us after the webinar and we'll do our best to reply back. And additionally, we'll be sending out a recording of the webinar along with a flash report of the key points discussed. Please keep an eye out on your email for that. And before we conclude, I would like to thank all our speakers for their valuable insights, and thank you all for joining us today. We hope you have found this session informative and helpful. Have a great day ahead. Thank you very much.